estate. We were talking about this over coffee the other morning, right?
Yep.
Like we typically do our morning coffee where we talk real estate.
That's welcome to the Venturi household.
Yeah.
Yes.
We probably just shouldn't talk about the things
I
that need to
know,
be done
I know.
around the house. We'll just talk real estate. But we were talking about all the words that, we weren't using until recently very often. They weren't in our general lingo, right?
Yeah. Well, and one of them is the word equity, Tracy. And that obviously that is a word we've used for a long time and will continue to use in the world of real estate. It's just that equity has exploded in the last year for many homeowners.
We need to say what equity is, right?
Right. So
equity is the...
here's the definition. The value in your home above the total amount of liens against your home.
Liens as in what you owe.
Right. What you owe to the bank or whoever you're borrowing.
And you might have a first, a second, a home equity line that you're using. So it's everything that you have value in above what you owe.
It's your equity.
Right.
So it has. I mean, and I know that the study that came out, and I'll just throw the stat in here, is in New Mexico in the last year is about $23,000 the average homeowner gained in equity.
It's a significant number for your personal wealth growth for sure.
And just the last thing on equity, it grows two ways. One, it grows by just a price appreciation in the market over time, as well as you paying off your principal every month. You're putting a little bit toward that. So the equity is a big one. Contingency, Tracy. Let's talk about that one. That one, again, it's been around, but it's in the middle of a real estate purchase in the transaction. That's something we deal with all the time, right?
Purchase contracts have a lot of contingencies in them, right? It's not just one. It's not just contingent on selling a house. But there's a lot of contingencies in our New Mexico purchase contract. There's a financing contingency. There's an earnest money. You've got a list. Go ahead.
I've got a list. So there's an appraisal contingency. We're going to talk about appraisal in a second. Assessments and title. So that's different title work, to find out what's going on with the property in ownership, and if there's any assessment against the property, meaning stuff that needs to get paid. There's an insurance review. That's a really big overlooked one, right?
Right. For property insurance, right? Making sure that the house isn't what we would call a lemon, right?
Yeah.
Just like the old days. We don't hear that about cars anymore, really. Cars being a lemon, I'm sure it still happens occasionally, but houses can be sort of a lemon. The insurance industry feels like if you've had a couple of claims on a house, there's something wrong with the house, right? So, and that stays with the house even when you sell it.
Yeah, so insurance review is one of the contingencies, and then there's a bunch of other things that the buyer has the option to review about the property, right?
Right. I mean, it can be from septic, well, water, all sorts of different things that it could be.
Right.
Yeah.
If it's a solar system, right? If you've got a solar system, that sounds like, pretty spacey. A solar panel, photovoltaic, electrical generation system on the home.
We did have a lot of solar space type things going on in New Mexico
we
this
sure
past
did.
week.
Well, and Texas, yes.
In Texas.
Yeah.
Speaking of space.
And then, I think one of the, just to wrap up this, on contingencies, one of the biggest one is the inspections, the actual inspection of the property, as well as the survey of the property, correct?
Right. Another word that we've used a lot this year that wasn't common is escalation.
Yeah, so what's
escalation
or what we call escalation clause? What does that mean, Tracy?
So an escalation clause is when there's multiple people wanting a home and somebody might say, I'll pay X over up to a certain dollar amount, and they'll escalate their offer based on what the other offers are.
Yep. Yeah, so that's become very common now in if in this competitive market if they're writing offers. So
let's talk about the last one.
Okay.
Virtual showings.
Virtual showings, obviously that
started like last spring, pretty
much.
Well,
we had done that before just with FaceTime and other stuff like that.
We've done a lot of them before COVID.
But now it's become much more common where somebody will want to see the home, but they can't, either they're out of state or whatever reason can't go see the home in person. So the buyer's agent will go to the home and pull it up on their phone.
Or the buyer who's not able to go to the home just looks at the virtual tour online and feels like they toured it. A lot of times there's not even a buyer's agent that goes to the house on their behalf.
Yeah.
Right?
Yeah.
There's a lot of ways to tour them virtually these days. So.
Appraisal, Tracy. Let's just talk about appraisal. Again, appraisal's been around forever. And first off, what and why on an appraisal?
So an appraisal is for the lender, typically. It's not usually done with cash unless, the buyer really wants one. But for loans, it's often required so that the lender can get a baseline and feel like they're making a good loan, that the house is worth what they're going to be lending on it. Now, these days, we've seen appraisal waivers from some lenders. They have some automatic system where they put the property in, the price that's coming, the buyer's qualifications, their credit score. It's not just the house, but the whole package. And they might say, they're putting $200,000 down. We don't need an appraisal for this loan.
Well, that's one of the challenges in our market right now is getting appraisals done. They're just so backlogged. It can be a challenge. So what about waiving an appraisal and an appraisal gap, Tracy? Those are two kind of new terms, not new, but they're much more commonplace now. So appraisal waiver, what's that?
So appraisal waiver of the contingency. So
Right.
They're saying we probably will still need an appraisal, but even if it comes in that I'm paying more for the house than the appraiser says it's worth, I'm still going to pay the price we agreed upon.
So does the appraiser set the value of the home?
That's a setup question, I know. So the appraiser gets a copy of the contract, which a lot of people don't realize. They're just trying to appraise it for the agreed upon price. But if they don't see other data out there to justify it for the bank, they're going to appraise low. But no, the buyers set the value of home and what people are willing to pay. The appraisal is there to justify the loan amount for the lender.
And so an appraisal gap is that comes in if you have an appraisal come in lower than what the buyer wants to pay or offered, right?
Right. So we might be under contract for $200,000. The appraisal comes in at $190,000. The gap is $10,000. And some of the offers we've been seeing lately, somebody might say, I'll pay $5,000 over appraised value if the appraisal comes in low. So they're kind of limiting how much extra they might be willing to contribute if the appraisal is low.
Got it. Okay. Well, that was our rundown on some of the terms out there. But if you ever want to talk about, some of these terms you hear in real estate and you're not sure what the heck they're talking about, give us a call, 505-448-8888, Venturi Realty Group with Keller Williams Realty. And just on the side note, Tracy, we were talking the other day about some of these terms when you're talking real estate investing in real estate, which is, there's a lot of that going on. A lot of people are, understand the value of real estate as an investment. I'm a big believer in that myself, and you are as well. But some of those terms like cap rate, internal rate of return, gross rent multiplier, net present value, there's all these different terms, and when you start getting in that world that are just again, it's like a whole different world.
I was going to say we could do 10 shows on just that world, right? All the other ways to look at it and all the other terms and the creative ways to finance deals and just lots more about that.
Yeah.